Hello. Welcome, welcome, welcome. I was just muted the whole time I was explaining that. All right. So, what I was explaining here, guys, is welcome. Again, my name is Cruz El Capitan. I am the founder and head trader at NewAgeWallStreet.com. We trade primarily options. We're trading a little bit more futures now. I did cut my teeth learning trading small caps. We do everything pretty much besides crypto. We do take some positions in crypto that are a little bit longer term, but no like really trading of it or what have you. I was explaining here the the calendar for this week, the economic calendar. I just use investing.com with the shortcut here on my browser, and there's nothing going on here on Monday except the Fed speaker here, and I believe this is after the market closes. And then Tuesday we have a short-term energy outlook and a couple of Fed members speaking, but nothing too crazy. But then we pick up here on Wednesday. We have CPI on Wednesday and a bunch of other numbers that are coming out. And then we also have the Fed meeting minutes from the last announcement that are coming out here as well on Wednesday. And then on Thursday, we have PPI that comes out and our regular weekly jobless claims that are coming as well. So these may induce a little bit more volatility. And then on Friday, we have retail sales and some other numbers coming out as well. So kind of non-eventful the first couple of days of the week, and then we get into some more numbers and volatility into the end of the week. So one thing that I kind of, what's up, brother? Happy Easter. Um, one thing I kind of want to get into is just the open interest for this week here, guys. And we're getting tomorrow. Yeah, I was like, so tomorrow is going to be the 10th. We'll look at now the new open interest numbers have not come out as of yet, but you can see right here that the 410 is still the biggest strike to the upside. And this is going to be around our 4150 on the ES. We'll go over that here in a little bit. And there's also 21,000 right here on the um, put side as well. So one thing, the way that I believe the market is going to go this week here, guys, is the beginning of the week kind of being non-eventful, getting some volatility triggered by those numbers on Wednesday, Thursday, and we'll see like going into like Friday. So a big thing is that even if we come into like the ES, right, and we look at the bigger the contracts that are sitting here, if we could get scrolled all the way to the 4150. Right here, there is, as of Friday, there's 954 contracts that are open right there. And then the next spot is 4170. So there is a little bit support 4130, 4125. So that's kind of our range for the week. And something that I'm kind of looking for this week is that we're probably not going to get too far from this 4150. We may peak our head above it, but I don't think we're going to get too far above it because of the high open interest that we have at that level. And up until OPEX, um, our OPEX stuff, it won't do anything until that point. So that'll be on the third Friday of this month, which is going to be next week. So that'll be on the 21st. So on the 21st, when we have the monthly expiration, all the open interest, all the gamma will burn off, and then that would allow us to move it even further up. And that's to say, like, if the numbers that we get on Wednesday and Thursday doesn't allow us to move all too crazy to the upside. Um, so, um, so yeah, so if we do get some volatility from those numbers and we start inducing a little bit more of a squeeze, then we get over this 4150 and then continue moving further up. All right. Um, so yeah, that's pretty much my plan for this week. Like I said, I don't think we get too much volatility in the first couple of days. This 412, 410 area is resistance, and then we'll look to this 406, 405 area to be support for this week. So as far as individual tickers, I don't have anything as far as like individual tickers that I think that I'm looking at here this week. I was looking at Shopify is putting in this really nice basing pattern, but think we may still be a little bit further out for us to continue going, but it's starting to curl up and put this little point in, and then a little push up right here as well the last couple of days. So right now we wanted to get towards 50, 52, and then continue going to fill in this gap right here. We also get into earnings season this week. I could show you. Let me get to the earnings whisper. I don't know what we have this week as far as uh, tickers that are um, reporting earnings this week. All right, so here it is. We're not starting off too. So we're barely starting into earnings season here again for Q1. So we have CarMax, which would be interesting. So CarMax and also Carvana would be interesting as far as on this side of things with the car loans and car auto loans and auto demand and things like that. And then we have Delta, Wafed Bank on Thursday, and we have some more financial banks and stuff on Friday. So this may influence the market a little bit further on Friday. So because these are before the open, this is after the close. So um, Wells Fargo, Citibank, etc. Is there any questions or any help that you guys want your for your personal trading and what your guys are looking for this week? So I'm just gonna kind of rapid fire go through like the big kind of tech tickers here just to kind of take a look. Tesla is kind of back here. Hopefully this is a higher low, and it can tries to come back up towards this 200. Apple has been great, at least the market whenever it's moving up here. So we have some resistance up here towards this 168, 60, 70-ish area. It has pulled back right now. It should try to find a little bit of support and then continue going up. Obviously, Nvidia has been on a freaking tear here, guys. I believe it's 300 is the magnet for it, so it will want to get to the 300. This is just kind of a pullback, the same that it happened right here. We're looking for this gap up and continue moving and going towards that 300 here on Nvidia. So there's that. Google as well. This was one that was kind of a straggler on because of the AI stuff. If you guys remember, it gave some incorrect answers, but now has fully recovered and is trying to continue to move up right here, guys, and has been really, really strong. So we're gonna have some volume right here as far as on the volume. What do you call it? The volume profile. So we pretty much got into this gap here, and then the next spot for it to get to is going to be this 114.50 or so. So it has a little bit to go up, and then I would expect it to go sideways a little bit and try to push up if the rest of the market continues going further up. Insider selling on Apple, yeah. So people selling on this big push up right now, yeah. Amazon has actually been kind of turning a leaf here too, so it's been looking pretty nice, getting this bottoming pattern, and it has a little bit of room to get to 109 from where it's at right now. Yeah, I don't. We were also looking at Lockheed Martin. Had a really, really nice week here this last week. Rejected 500, so may need to go a little bit sideways, pull back a little bit to move above this 500, but definitely has potential to continue moving further up as well. And what else, guys? I have Monster. They actually just did a split, and um, so they were up here at this 55 right here, and we're basically testing the breakout point, and I wanted to continue moving further up as far as right here. So we broke out, we came retested, and I wanted to continue going further. I think you had Merck for a list of some reason, but I'm in the car in Merck. MERK. I don't see that as a symbol. MERC. So this one has a little bit of a volume drop from here from $9 to about could get to about 8 for sure, maybe 7. So yeah, this is not looking too good. What else? I can't really look at the scans for right now because it doesn't have everything from that we need on it. So just kind of doing these off of the top of my head from where the tickers were at. But if you guys have anything else you want me to go over for this week, like I said, I think my thesis is this week Monday, Tuesday, we don't have too much movement. And then going into Wednesday, Thursday, we have a little bit more volatile action because of the numbers. And then from there, I don't know. But long term, I would like to for the ES, and this is something right here that I was going to tell you. So you guys could see this compression on the ES where it wants to break out above the 4150, get to 4200, and then the biggest target where I wanted to get to is about 4500. So 4500, 4600 would be absolutely awesome over the next 4 weeks or so. If even that, maybe it's a lot quicker. But that's something that I'm looking at is this kind of like a little inverse head and shoulder sideways action for us to break this neckline and continue going further up. Cool. We'll look at a few sectors here. Healthcare. Um, I don't know. It's what is it? XLH. How come it's not typing? What's healthcare sector? So sorry, 1 second. XLV, excuse me. So XLV is the healthcare sector. So yeah, this is what I was gonna say right here. So the healthcare sector was actually really, really strong this past week. So I will keep an eye on this to see if we continue to get some moves up right here. But we're pretty much at this resistance at this from this range right here. You guys can see this, right? So this resistance right here, we got, and then this channel pretty much in this area. So if we break out, then our target's going to be up here towards this 140. I'll go ahead and extend this. So this is our target around right here. If we break this 133 to 135-ish area, so you get kind of a 5-point move right here. So kind of like a 2% gain or so. So that keep that in mind. And then also the financial sector. So if you're looking at the XLF, these were kind of mixed. A couple days they were really strong, and then they got really weak again. But we're looking pretty bear flaggish right here. We'll see once we get into some more supply if it does move up and see where it continues to go from there. Um, and then what was so is it XLU? So utilities was also really strong here this last week too. We'll keep an eye on those two. All right. Um, all right, guys. Kind of a quick, dirty StockCast. I know everyone is trying to enjoy their time with their family and stuff today. We got a long weekend, so excited to get back to the grind here tomorrow. Is there anything that you guys want me to take a look at or go over with you here while I'm here on the live? It could be any type of questions like with your trading, as far as like psychology, the issues that you're having, how to improve, anything like that. If you got value out of the live, please like and share it so we could get some more people in here. Be a party on Sundays for us as well. All right, guys. I appreciate you coming and taking a look and hanging out with me for a little bit. I hope this helps out. If you take a look here, guys, every I'll actually show you on my Twitter. So every morning on my Twitter, you come into my profile and I put up this free landing page right here, and it has our game plan for the day with the levels that we're looking at. So it'll look like this. So it's a daily game plan for and option levels, and you click on it. It'll bring up the landing page. It'll give you our kind of game plan right here, and then also the option levels that we're looking at right here, totally free as well. I'm working on making this a little bit better with for it to give some more information. So make sure that you are looking at that. You follow me on Twitter so that you could get that value as well. Like I said, absolutely free. But that's gonna do it for me today, guys. I appreciate you guys coming and hanging out. We'll see you. And then how do we learn to know when to stay in the trade longer? So that's a very not vague question, but in depth question. Oops. So in depth question, right? So um, I would say that it depends largely on the instrument that you're trading. Because if you're trading like zero DTE options, that's gonna it's gonna be a little bit harder for you to do that because of the theta decay and the gamma whenever your ticker starts moving and things like that. But if just normally, like if you're just trading regular equities or you're trading futures and stuff like that, uh once your trade starts moving in your favor here, there should be a point where it becomes a risk off type trade, right? So we'll use this Google zero DTE. Yeah, so if you're trading options, I would say honestly, if especially like if you're more of a novice trader, just do away with the zero DTE options, dude. I'm the funny thing is that I feel like I'm one of the originators of the whole zero DTE thing. um well, I was telling people to do like closest to expiration is since a long time ago. People thought I was crazy taking same week expiration when there was only weekly expiration. So if you're still trying to build your account, I would say that trading futures is a whole lot better for you in that type of way because the theta and all that is going to hurt you more than anything. So um, we'll use this example here on Google. So this purple candle right here, this is my like proprietary kind of algo thing that I'm building and stuff. And so right here, what I'm showing is that this is where you should be taking the trade in order for this to move up, right? So when you take this trade, you would have something looking like this. So your risk is going to be onto the PDC area right here. So right here in this area is where you move to the upside. So this would be like your first little area or even the pre-market high right here where you want to take some profit. And once it gets to that point, then you want to move your stop loss to break even. So then at that point, no matter what happens, you already took some profit off the table then at that point. And then if it comes against you and it goes ahead and takes you out or what have you, who cares? You already at least pay for the trade, pay for the commissions. If you wind up at zero, who cares? You move to the next trade. It's absolutely fine. Now and then you just kind of keep trailing your move. Then at that point, once it goes ahead and breaks the resistance, cool. Then you go ahead and you move your stop up again. If it goes ahead and breaks below, say this R1 pivot, cool, you're going to go ahead and take profit there. Then the next one, right? So then once it moves here, it breaks, you're going to move your stop loss up. So just kind of a trailing stop loss, and then putting your risk once you get to the first resistance, taking some off and paying yourself so that if it does go against you, that would be the best thing for you then, so that you don't lose any money unnecessarily, right? So if you wind up like it's zero, you don't make anything off of it because the commissions or whatever it is, fine, that's what it is. There's always another trade. But whenever the trade starts going in your favor, make sure you move your stop loss up so then it's at your break even point, and then you just kind of nurse it and let it do its thing. The other thing is too is using bigger time frame, dude. Like, I don't know what time frame that you're using, but whenever the trade starts going in my favor, I'll start coming and putting in, like, I usually enter on a 5-minute chart. I'll come and put a 30-minute chart in or whatever, right? Or 15, 30 minutes. And as long as it's moving as higher highs, higher lows, whatever, I'm gonna go ahead and stay in that trade. So to kind of wrap up what I'm saying about this is the biggest part is moving your stop loss to break even so that it doesn't go back that you don't allow the trade to go against you, and then a winning trade turns it into a loser, and then using bigger time frames. I hope that helps out. Awesome. Now that let's see a couple more people in here, guys. What's up? You guys have any questions with your trading or anything? Post them. No, dude, like that. This is what I'm here for, man. The only reason I wanted to go is like if there's no one that I could help out, then it does me no good to broadcast to an empty room or anything. But if you're here, if there's one person that I could help on this live, then it was worth it. It was absolutely worth it for me to be here and be able to do it. And if you got some value and that helps you out a little bit, then I would say that's a lot better. But that's kind of what's happened. Helped me quite a bit is when I enter my trade is moving my stop loss to the break even, and then taking some off of the first resistance, and paying myself. Then I'm not hoping and wishing that it continues going, crazy. I've already paid myself a little bit, and then say this was to come back down and hold this pivot area right here, and this balance line is what I call it. So if it came back and held right here, then I could go ahead and add back what I sold right here, and then it bounces and then continues going up, and then I just made that money again, right? So if this starts channeling between this pivot line and then the R1, then I'm working just this dollar, yeah, about $1.50 area, every single time, just buying, selling until it breaks out, and holding those runners for the continue going, and having that breakout, or excuse me, that break even point right here. Cool. Let me know how that goes. If it, if you don't do that and you do start doing it this week, let me know. Come Tuesday so that's what I was going to say is Tuesdays and Thursdays we trade live here, absolutely free. You could come trade with me on Tuesdays and Thursdays. We usually get going around 9 a.m. Eastern. We'll do like a quick little game plan and watch list, and then we'll trade live together for the open around hour and a half, 2 hours or so. And if you want to enter a trade, you say your thesis on why you want to enter a trade, and I'll give my 2 cents about it. If you agree, great. If you don't, that's fine as well. And I try to help. We try to work as a team together to nail some trades, and on Tuesdays and Thursdays, and then on Sundays, like this is on at 7 p.m. Eastern. We do STOCKcast where we just study and kind of get ready for the week and do watch lists and stuff like that. Cool, cool. All right, guys. Last call for questions or analysis on any tickers. Do I pyramid into entries? No. That's a really good question, dude. A really, really good question. So let me ask you a question here, Charles. Do you do that? Is that, and first of all, is that what you mean, like pyramiding into a trade, like where you'll say like, oh, I'm going to take a starter or a feeler, and then I'm going to go ahead and add on the break or add on the dip, or whatever it is and stuff like that. Last call for stock alcohol. I'm gonna, dude, you trade that and trademark that. I'll pay you a royalty. I'm gonna use it. All right. And the way that we trade in my community is a lot more. It's a lot different than a lot of communities. Yeah, because actually is a bit hard. What instruments? What instruments are you trading? Yeah, so I agree, dude. I started trading options in like 2018. At back in those days, we had to walk to school uphill both ways, and it was snowing. So I definitely understand what you're saying by that. I don't know if you're using market orders or like limit orders. Most tickers, right? Most tickers now are very liquid where you could go ahead and take those types of positions, especially like the Apples, Teslas of the world. You're gonna get filled pretty dang good, pretty close. SPY especially, things like that. If you're taking options trades on like GME and things like that, no, you're gonna get screwed. Yeah, the limit orders. Yeah, so um I don't. So to tell you the reason why and my thesis on the whole pyramiding into trades is lack of confidence in your setup. So, and again, this is my opinion and what I've done the back test for is a lot of my members. The reason why they want to pyramid into a trade is because they're scared of taking a bigger loss, right? So if same thing with this type of entrance right here, right? So if you're taking this trade, and we'll go back to the 5 minute because that's where I take it at. So if you're taking this trade on it right here, um, exactly. So if you're taking this trade right here and you're saying I'm going to take two contracts right here, and then if it comes back a little bit down to two contracts, it's it's a lack of confidence in your setup that it's not going to go in your direction, and it's a fear of you losing that money. It's going to go ahead and go against you, right? So now some strategies, and I think that like I mean, I understand what you're saying as far as like slippage. If you're doing some pretty big contracts, I don't know if you guys are doing like 50. Whoever is teaching traders to take like big lots of like 50 to 100 contracts at a time for like 10 cents or 20% moves or whatever, in my opinion, it's BS. It's bullshit. I don't know why they're teaching people to do that. It's a cancer that's happening right now. Um, I don't take anything unless it has a potential to go 50 to 100% on the actual contract premium on the options. And that's just being patient and only taking those nice A plus type setups. And so um, I don't pyramid into my trades, and I don't get into that because I have confidence. I know the numbers behind my setups. These purple candles hit 48% of the time, and they hit at a 20 risk reward rate whenever they do win. Whenever they do work. So like right here, the entry was going to be like 104.95. The exit would have been, this one's a little bit bigger, 104.35, so about 70 cents, but it also went 107. So you risked about what is this? 50 cents to make $3 or something like that. So the risk to reward is definitely in line, and even though it's a lower win rate, the expansion on it is a whole lot bigger for you to make big trades. Like it on the ES, we had a big one the other day. I don't know where it is, um, but no. So like to answer your question, I don't pyramid into trades. If you're confident in your setup, when your setup triggers, your setup triggers. You're taking that trade. Whenever you start getting into programming and algo and stuff, unless you're telling the algo to take different position size, for whatever reason, it's going to go ahead and load up what you want at that point. It's not going to say, hey, maybe we should wait and then, take only one right here and then one right here and then one right here or whatever. That's a discretionary feeling thing that you're trying to play towards your feelings instead of nailing the setup. So that's my little rant on that, dude. Is if you know the numbers and you know the back testing of your setup and you know it's profitable, why not just put your huevos on the table and freaking hit it, bro? Hit it every time, because the as long as you're taking it consistently, the numbers are going to work themselves out. If you have alpha, and you're gonna be successful as long as it's a winning edge or a winning setup. You're skewing your numbers too much by putting different entries all over the place. Yes, I did as much back testing as you could, dude. I'm big advocate right now telling people to learn how to code at least a little bit of Python. If not, pull out your pocketbook and pay someone to do it for you. It will be the best money that you ever spent. So, and the confidence that you get behind numbers. So that's one of the main things that I say is that Men lie, women lie, but the numbers don't lie, right? So the statistic amount of what your setup is set up to do, right? The win rate of your setup, it is what it is. There's no line behind it. So the alpha behind your setup, you could trust it. So I know I could take, 3 losses of these purple candles or whatever, right? Back to back to back, or 4 losses back to back to back. And yeah, it sucks, right? My P&L is going to suck, but on a consistent basis, just like this, right? So stop out right here. This is, choppy. This is, it would have been stop out right here. This one's a nice little trade. And then some days we get, really nice, this, let's see, like on this one, get ones like this. So from 106.75 to 108.56 or whatever on the SPY. So where do I get data? So I actually get my data from Intrinio. It's pretty expensive though, but you could use Polygon. Polygon is good. You could, if you're trying to get options data, SIBO has a lot of free data for you guys on just cboe.com. Dude, there's so much data that's out there and people just don't go and look for it, and it's free. Like the SIBO stuff, you could make a whole gamma chart and notional value chart just off of the free data that they have from the SIBO website. But if you're trying to do run backtests and stuff like that, like I said, Polygon is good. Spikey is cool. There are stuff that is limited and stuff like that. No problem, bro. Appreciate you coming and hanging out on a Easter Sunday, bro. Yeah, Intrinio is pretty cool. Yeah. Even if you're able to, so kind of, I'll show you real quick. Trading View. So this is Trading View. Like if you're able to code a little bit of Pine script, you could code the Pine script in here and make it a strategy, and it'll tell you like everything. It'll list out all the trades that it took and stuff. So the last trade that this took was $498. It lost 421 before that, made 38, $41, etc. So if you could make a little bit of Pine script to backtest your strategies on TradingView, this is probably one of the best ways to be able to do it. That's kind of most cost effective. And you can see that my strategy right here is $130,000 in profit based off of the back testing off of it. And you can see that it's only profitable about 43% of the time. Cool, guys. Any other questions? All right, if you want to trade live with us, we'll see you on Tuesday. All right, guys. Guys, take it easy. Trade safe this week, all right?